Hello, and welcome to the Geopolitics Explained podcast. Last episode, I introduced the concept of fiscal dominance. I then explored what fiscal dominance can lead to before providing some historical examples where fiscal dominance was both successfully and unsuccessfully navigated. I'd recommend listening to that episode before listening to this one, because today we'll explore some indicators of fiscal dominance and which nations in the world today are under threat from potentially entering an environment of fiscal dominance. As global debt soars and inflation pressures persist, some governments are pursuing central bank policy that suits their fiscal needs. As we discussed in the previous episode, this risks fiscal dominance. How will this concept define the next few years and decades of monetary politics? So, to begin with the indicators of fiscal dominance, it was looking back at the historical examples in the previous episode in which I discovered many of these indicators that can imply that fiscal dominance is set to take control of a nation's monetary policy. I've split these indicators into 5 separate categories. They are debt and fiscal indicators, monetary and policy indicators, currency and confidence indicators, inflation and market stability indicators, and finally, political and institutional risk indicators. We'll begin with the debt and fiscal indicators. Firstly, we can look out for failed treasury auctions as a potential indicator that fiscal dominance could be arriving. A failed treasury auction indicates falling investor appetite for government debt, and in this case, it's often the central bank that has to intervene by purchasing government debt itself. Other indicators include credit downgrades, a rising debt-to-GDP ratio, a rising ratio of interest payments to gross domestic product, and finally, persistent fiscal deficits. The main thread in common with these indicators is using debt to finance spending. If left unaddressed, this continues to spiral and can lead to fiscal dominance. Moving on to monetary and policy indicators. And the first indicator I want to discuss is the percentage of government bonds that are owned by the government. As I stated, in the event of failed treasury auctions, sometimes governments have to buy their own bonds. We also have yield curve control as a potential indicator of fiscal dominance. Yield curve control reflects direct manipulation of borrowing costs in an effort to sustain government solvency. This occurs rather than the market driving yields via supply and demand. Other indicators in the monetary and policy section include quantitative easing, the loss of central bank independence, and monetary expansion outpacing gross domestic product growth. Next, when it comes to currency and confidence indicators, the first indicator I've included is currency devaluation. A devaluation reflects a major loss of investor confidence, and it indicates that currency debasement is being used to reduce the real debt burden. If this is seen, fiscal dominance has already taken hold in a nation. We can also, in an environment of fiscal dominance, see capital flight, which again indicates a loss of confidence in a nation's financial system. Just this time, the source of this loss in confidence is external. Finally, we can see an alternative challenge to the current reserve currency system. This signals declining trust in the current reserve currency system's long-term stability. We next have inflation and market stability indicators. These include financial shocks, inflationary spirals, and a flattening of the term premium despite inflation persisting. Finally, the political and institutional risk indicators include a domestic political crisis or policy populism. Both of these can weaken confidence in the fiscal situation because it increases the temptation for politicians to intervene in monetary policy or stimulus. So with a quick discussion on some potential indicators, let's next move on to which nations in the world today are potential candidates to enter into an environment of fiscal dominance in the future. Before covering the specific nations, it's worth noting that fiscal dominance risks aren't confined to one region or economic type. They range from advanced economies with high debt burdens to emerging markets facing political and inflationary pressures. With this said, where in the world today is fiscal dominance a threat that could emerge in the coming years and decades? Firstly, I'm going to discuss the nation who prompted me to begin this series on fiscal dominance, and that's the United States. During the COVID-19 pandemic, the United States Congress approved between $5 and $6 trillion in emergency spending measures. This pushed the federal deficit to 15% of gross domestic product. This is a level that had not been seen since World War II. At the same time, interest rates were at near zero levels. This, of course, introduced inflation, which a few years later the Federal Reserve raised interest rates in an effort to counter. We now find ourselves at the other end of this, with a rate cutting cycle commencing, but inflation does remain elevated above target. Trump is now throwing a spanner in the works, and it's this that I'll discuss in greater detail in next episode. For now, we're going to move on to cover more examples of where fiscal dominance could potentially emerge. Another high-profile example that we've seen emerge in the last few years is the United Kingdom. The UK entered into a phase of fiscal strain during the 2022 gilt market turmoil, which was brought on by the Truss government's unfunded tax cuts as a part of their budget. Debt in the UK is now at 100% of gross domestic product, and the Bank of England holds a significant portion after years of QE. Rising interest costs and a fragile bond market underscore the risk that fiscal needs, and not inflationary pressures, could shape policy choices in the UK in the future. We also have Japan, who we have discussed in the last few episodes. Their debt to GDP is amongst the highest in the world. Prolonged yield curve control and government bond purchases have seen fiscal pressures drive monetary policy for decades. The Japanese do have some aspects of their economic system that mitigate the pressure of fiscal dominance, such as high domestic ownership of debt and typically low inflation. But if inflation does spike, then an environment of fiscal dominance could emerge, because this would be heavily dependent on how the Japanese central bank would respond. To cover some European nations now, we also have Italy, whose public debt to GDP ratio is at 135%. With slow growth and political instability common in Italy over the last few decades, this naturally compounds fiscal pressures. Now, the Eurozone is notable because Italy cannot individually print money itself, and so it depends heavily on the European Central Bank and other European nations in its effort to pursue stability. Any reduction in ECB support or general loss of investor confidence could see debt sustainability questions emerge. Since Italy is a part of a bigger picture in the EU, sometimes the European Central Bank can't be as flexible as other central banks, who only control their own domestic policy. This can be to Italy's detriment. Another nation who is emerging who is relevant to the discussion of fiscal dominance is France. France's debt has climbed above 100% of gross domestic product amid weak growth and extreme fiscal deficits. As a result of this, France has grown reliant on accommodative monetary conditions. This is presenting itself politically, with excess spending being questioned by voters for its long-term sustainability. This is a softer case of potential fiscal dominance, but it does remain relevant. The final example that I want to discuss is Brazil. Brazil has persistent deficits, typically high interest rates, and political interference in the central bank. Their debt levels are around 90% of gross domestic product, and rising interest payments are consuming fiscal revenue. Market confidence in Brazil does remain sensitive to any major fiscal moves, which itself remains under political pressure. It's the fact that this political pressure is a recurring theme in Brazil that could emerge again in the future. Other notable nations that are potentially at risk of fiscal dominance or are already undergoing fiscal dominance are also Turkey, Ghana, and Argentina. For the sake of length in today's episode, I won't discuss these now, but I've been wanting to dedicate an episode to Argentina and its current economic system for quite some time. So this will be an episode that will come out in the future. Turkey's economic system and the policy that they've pursued is also incredibly interesting. I will likely also return to this in a future episode. So these are some examples of potential fiscal dominance worries that could emerge in the world today. Of course, as I stated earlier, I was prompted to begin this series by the nation who is likely the most important when it comes to this discussion of fiscal dominance, and that's the United States. They're the most important not because they are the nation that is most at risk of fiscal dominance, but because they are the nation who would have the greatest global impact if they were to enter into an environment of fiscal dominance. It's the United States and its current economic environment and the potential for the United States to enter into an environment of fiscal dominance that I'll discuss next episode. Fiscal dominance is slow-moving, but when it arises, it is a powerful force. Several nations are showing clear signs of fiscal pressure, with the United States ultimately standing out because of the global impact it would have. The choices made by governments and central banks today will shape not only domestic economies, but also international confidence in the financial systems of today. Over the next few weeks, as I've stated, I'll discuss the United States and fiscal dominance, but then I'll also expand the discussion onto currency systems in general and the US dollar. If this sounds of interest to you, make sure to keep an eye out for future episodes, which are typically released every Tuesday and every Friday. That's all for today. If you enjoyed this episode, why not leave a review on the podcast platform of your choice? It really helps get more eyes on the podcast, and I greatly appreciate it if you have already, or if you do choose to review the podcast in the future and give it a favourable review. I've been Dylan, and I'll talk to you next time.